Welcome back to Crypto Hustle 101. Today I'm going to go through using the long and short position tools in Tradingview to determine your risk to reward ratio when you're trading. Okay, let's jump straight into it. The long and short position tools are located here on the left inside of the measurements and predictions tool menu. Just click there. All right, let's go ahead and put this on the screen. Okay, so in red what you have is the amount you're willing to risk to, which is 24.86%. And up here, this number represents the amount you're going to gain if you're correct, which is 24.86%. Now, since these numbers are the same, that makes the risk to reward ratio a 1-to-1. If we make it a 2-to-1, you'll see how the numbers change. Okay, so 2. All right, now that it's a 2-to-1, you're risking 27.19%, but if you're correct, you're going to gain 54.48%, which is 2 times the amount you're willing to risk. That's why it's made a 2-to-1 ratio. Now, if you say you put in $100 inside of an investment, if you were wrong on that investment, you will be down $27.70. And that same $100, if you're correct, would be $55.51 if you were correct. So this is a pretty simple concept to grasp. But I saw a disturbing number of people on YouTube actually teaching this wrong. They were selling courses. They were talking about how they were day trading experts and telling people that when you get a 2-to-1 ratio, $100, you make a quick $200 if you're correct, which is, as we just learned, wrong. So, and they were also telling people that, okay, when they're day trading, they try to look for quick 1-to-1 ratios of things. So they're looking for trades like this, where the risk to reward is 1-to-1, and they're saying, okay, this is a quick way to get my money back. I put in 100, I make 100. Well, as you can see, they would make $24. That's just one of the things I've been noticing as I've been looking online and looking at other people's stuff, is that there's a lot of people who are getting over on the new people who are newer to trading. And I just didn't think I would have to make these type of videos, but I'm thinking I'm going to have to start making more and more videos to just teach the right way so you're not learning wrong. Also, when you're doing this stuff, whatever you see online, you can actually just test yourself. You go back into the charts and you look and say, if you use this replay button, you can go back in time and actually see if what they're saying or even your trading plans even work. So let's just go ahead and do an example of how that works. All right, so let's click here and go back in time. All right, so now we're here. And let's go ahead and hit play and see how I would play this. Okay, so if we pause it right there, right now a few things happen. If we go back into our previous tutorials, let's go to the fib and see what's a good level for us to think about going along from. Okay, so that's that. Click here, go to our template. Okay, and make sure we put in that 0.886. Okay. All right. So right now we have a few things going on. If we go here and put our zone in, the space where we would think about getting long from is inside of here. So we're already below that. And as you can see, we're hitting here on the 886 level, which is a good level to get in. And let's see about the momentum. Yep, we got divergence. We got a bullish divergence. Let's go ahead and point that out. Here in the MACD, you have price. The actual MACD is going higher while price is going lower up here, which means that the asset is actually stronger than it appears. All right, so like I said before, you want to have 3 reasons before you get into a trade, whether it be long or short. Now, right now we have location and we have momentum divergence right here in the bullish direction, but we don't have market structure. And it's pretty important for me when I'm getting into these trades. So we got to wait till we see that before we can think about looking into making a position. All right, so let's hit play again and see if it plays out. All right, so moving along. All right, let's stop right here. All right, right here, it's not quite a double bottom, but whenever you see price beginning to make this Wing pattern, let me go ahead and show it to you a little clearer. When you see price starting to make a W, that's also considered bullish market structure. That's an ugly W, but just work with me here. All right, so if we were to see that W break across this line, then that's confirmed. If you see it close above here, that's confirmed. All right, so let's go ahead and get rid of this, so we're not cluttering up our chart. Also, another thing you can do is that you can change this to a line chart, and you'll be able to see W's easier. Like, see how much easier it is to see that that's actually making a W, and all you're looking for it to do is close above this line, and that will confirm it. And now, so we see this, let's use the long and short position tool to frame out our trade. All right. So right now, here and here. All right. So right now we got to find out. Right now we're 1-to-1, but we don't know where our profit objective is. So let's change this back to a candlestick. All right. Let's hide this for right now. So now we use the fib retracement tool in reverse. We go from the peak down to where it bottomed out at. All right, so since we're starting down here, you want the 0 to be down here, which means we got to go into the settings of this fib retracement tool and reverse it. Hit reverse. All right. So now we have the 0 down where it bottomed out at. And now we see this W here. So let's go ahead. We already got our risk to reward ratio set. And what's the 50% rule? Price usually tends to go back about 50% of the move, the entire move. So let's go ahead and find the 50% line and see where we're at. Okay, we have a 2.32 risk to reward ratio, which means we're good to go. So we got location, we got momentum divergence, and we have bullish market structure right here. Oops, let me just hit that back button. Let's go ahead and let this play out and see what happens, if we'd have won or not. Boom. So as you can see, we easily hit our 50% level right here to be in a profit, and it topped out over here, which actually makes sense because just like I said before in previous videos, just like there is a long zone, there's also a short zone, which is between here. Let's go ahead and change that color. And here. Okay, just like there's a long zone down here, you want to look to get long here. There's also a short zone. And as you can see, price ran all the way up into here and turned around. So we could have made our profit objective using the tool here. And we'd have made 100% of our money back. Meaning we could have put it, whatever we put in there, say $100. At this point, you would have made your $100. You can take out 50%, 75%, all of it, and you would have been in profit from that point on. So this is a technique, like I said, you can use it. And let's go ahead and close this out, actually, so it don't freeze up our screen. Yes. Yeah, so that's the replay tool, and I would advise that everything I'm going over, just test it for yourself and see if it works for you. It may or may not, I don't know, but I know that once I started doing it this way, I started to see more success in my trading. So, and we have to go over the short tool too. Let's go ahead and clear some of this stuff out so we got a clearer screen. All right. So, just like we were looking for W's down here, the opposite is necessary. You want to look for M's up here for us to go short from. All right, so if we go and just look, we don't see anything clearly here, but when in doubt, you can always zoom out and go from a daily to a weekly. All right, now if we go to a weekly chart, everything seems even clearer. Like you can clearly see that over here, a W formed right here, and once it broke here, went to the upside by a lot. Came down, another W over here before going to the upside. Okay, and also just like if this stuff's hard to see, change it to a line chart. And before, if we go back, this just looks like a bunch of gibberish, but if you go here, it's easy to see that that's an M pattern or a double top. All right, so one of the things I learned from the Rational Investor when they introduced this to me is that they said, let me get this drawing tool. Whenever you see the market smiling at you, it's going to take your money. Every time you see the market smiling at you, it's going to take your money. And that always stuck with me. So when you see these W's down here, you're probably going to win. If you see the M's and they're smiling at you, you're probably going to lose. So that's just something that had to stick when I was learning it myself. All right, so let's just get rid of that. And let's go ahead and do this. Show you how it works with the short tool. All right, so let's go over here. Actually, let's go ahead and use the replay button and walk through this whole thing step by step. Okay, so let's change this back to a candlestick chart. All right, so say this is what we're looking at. You see it, it's right here. Price is here. So first thing we're doing as it's starting to back off is we draw our fibs. Go from here down to here. Let's go ahead and reverse that in the settings. All right, so here's what we're looking at. If we're going to do this in reverse and we're already up here, obviously we're not going to get long here at the top, but we could get short. So we're going to use this same Fibonacci retracement tool since we're determining that in here is where we'll look for price to turn around once it got down here. Then, and we're here, that's also the place you would look to take profits if you were shorting. Let's change this to green so we don't confuse ourselves. All right, so now we're here. All we have is that we think we're going to come down back down to here. So we don't have anything else. So let's let it play. All right, so let's change this back to a line chart. All right, so now we see if it was in real time and I was looking at it, I said, okay, we're here using our short position tool. Frame it like this. So instead of, now we're risking for it possibly continue on a continuation and going past this and we would lose. But if it continues down to the green zone, well, now we're going to win in our short. So let's go ahead and change it back to candles, see what I'm talking about. All right, just like this is the top, say 50% rule will be right here. So if we're going to risk to there and we try to go to the 50% line, that will make our risk to reward less than 1-to-1. We definitely wouldn't take that trade. But if you're looking in here, we know that it should try to turn around somewhere in here, maybe even go down to here. So if we made our target for the short in the green zone, we see a 2-to-1 right there. So that's 2-to-1. If you wanted to, if you're into shorting, you could look for other reasons, like you would look for bearish momentum divergence. You would look for, like we see, decreasing volume here. Any other reasons, as long as you can come up with at least 3 of them to get into a short, you would use your short position tool to determine your risk to reward to ensure that you're not going to, if you lose, you're not going to lose more than you would win if you would hit your target right here. So that's pretty much how it would work. That's the long and short position tool. Also, the thing I wanted to point out, let me just go ahead and get rid of this so we can get back to real time. Like I was saying before, like the M's and the W's as far as bullish and bearish market structure, the bigger the time frame, the stronger the signal. So a bullish momentum divergence on a daily, weekly, monthly time frame is a lot stronger than an hourly or minute chart. So, and if we look at this chart right here, we can see a bigger W. Let's use this brush tool, line chart. A very big W forming on the weekly. So pretty much the same concepts we used on the daily and the 4 hour can be used on the weekly, the monthly. Doesn't really matter. But understand that the bigger the time frame, the stronger the signal. Also, the bigger the profit if you're right on your prediction. So I just wanted to point that out to people. I'm going to go ahead and stop this video right here. Just hopefully you got something good from this. And please, 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 just test and practice. The only way you're going to get better at this stuff is if you practice. Like looking at videos is good to give you an idea of what to do. But the only way you become better at what you're trying to achieve is through practice and being consistent with it. So that's it for this video. See you next time.